Hi, this is Larry Lane for InvestorZoo.com, and today we're going to discuss dollar cost averaging. So if you've been an investor for the last couple of years, you know there are some huge risks in the market. Volatility will cause your investments to gyrate and swing wildly from time to time. How you deal with that volatility will depend upon your success as an investor. Unfortunately, as we've all seen, there is no free lunch. You don't need to go further than to look at a company called Long-Term Capital Management. Long-Term Capital was a hedge fund that ultimately lost $4.6 billion in less than 4 months. Um, some of the people involved consisted of John Meriwether, the former vice chairman and head of bond trading over at Salmon Brothers. The board of directors included Myron Scholes and Robert Merton, who shared the 1997 Nobel Prize in Economics. So the most brilliant minds of the investment world lost $4.6 billion. Ultimately, they went belly up and bankrupt. On a historical basis, the market has seen a 10% drop about every 18 months. On average, you'll see a 20% loss every 2.5 years and a 30% hit every 4 years. Um, so in 2002, T. Rowe Price, which is a mutual fund company, did a study on investing and found some pretty amazing statistics. If you invest for 1 year, you stand a 27% chance of losing money. If you have 3 years to invest, you stand a 14% chance of losing money. 5 years, you stand a 10% chance, and if you invest for 10 years, you have a 4% chance of losing money. Um, so the stock market can be a pretty scary place. Unfortunately, no investment is 100% risk-free. The economy, the interest rates, wars, terrorism, all are going to affect the value of your investments. One of the keys to being a successful investor is staying long-term, invested long-term, and being properly allocated. Now, I'm not a financial advisor, so please do not take any do any stock trades or investments based upon the blog. Make sure that you consult your financial advisor before making any financial move. Um, so if you had invested all your money in stocks and you've seen a large drawdown in your assets, however, if you stayed conservative in bonds, you'll get hammered when interest rates go up. Had you stayed in commodities, oil went from $147 down to 40 in 2008. If you had too much money invested in oil, you may have done something stupid along the way. So if you had just 5% of your money in oil or commodities during the way, um, you saw a downturn, but chances are you slept pretty well. For most investors who don't have time to pour over charts and go over annual reports, dollar cost averaging may be the right thing for you to achieve investment success. By dollar cost averaging, you can be wrong for years and still come out ahead. So dollar cost averaging, basically what it is putting in the same amount of money every month and just being consistent. So what you're doing is buying more shares when the market goes down and less shares when it goes up. The theory behind it is that over the long period of time, 15, 20, 30 years, the market's supposed to return 8 to 10% a year. So not only are you getting the magic of compounding interest while staying fully invested, but you're also, um, again, buying low, selling high. So there's been a lot of things said about buying and holding. Buying and holding is dead. Buying and hold doesn't work anymore. In the current situation that we're in, they're right. Over the last 10 years, the market has returned zero, absolutely nothing. So you've lost to bonds, you've lost to inflation, you've lost to commodities, you've lost to just about every asset class out there. However, that being said, again, given a long-term time horizon, and the only thing we can go by is past performance. Although there's a saying that past performance is, of course, no guarantee of future results. what do you have to go on then? If you can't see over the last 70 plus years of the markets return 8% and assume that it's going to return somewhere in the neighborhood of 6 to 8%, and that 6 to 8% will outdo every asset class available. Stocks are, in my opinion, the way to go. Again, please consult with a financial advisor before making any decisions. This is Larry Lane for InvestorZoo.com. If you would like to check out some of our additional blogs on personal finance and savings, please go to InvestorZoo.com, where you can also place one of your own blogs and give back to our community. Thanks and have a profitable day.